I'm on a different level, should be in different eras. Since the time you gone, the only time they cherish. Suck with it. We back with another episode, man. We're gonna get straight to it in a minute, but you already know we got to get through the warm up. So if you haven't subscribed to the channel, please do so. Like this video, share it with a friend, share it with a partner, and help me expand my platform. In the meantime, we're gonna get straight to it. I'm gonna show you a little bit of stuff I've been working on, right? Let me open this up. If you can't hear it when I play it, so be it. But I'm gonna just explain what's been going on. I'm gonna give you a full breakdown of how to mix and master a song in about an hour. No, I'm just playing. I'm just playing. We're just gonna get through a little bit of the basics, and then I want to talk about what's been going on in the stock market and what to look out for this week and the upcoming weeks, right? So we're gonna talk about how to stay calm when you see a portfolio dropping, when you see the market dropping, how to prepare for this so you can make money in either direction, because you can make money going up and you can make money going down, and how to read the red flags, how to read the data. We're gonna get into all that. It's gonna be an eventful episode, right? But first, I just want to show you what I've been working on. Again, if you can't hear it, I mean, I'll fix that later, but hopefully you can. So basically, all these are the vocals right here, right? So this right here is the vocals that I recorded. These are the main vocals. This is the verse here. Then you got the background vocals here. So this is what I recorded. All these vocals, ad libs, more background vocals here, leading up to the main vocal channel. So all that's going to the main vocal channel, right? So what you first do when I start off with a little bit of EQ. EQ is basically taking out certain frequencies and boosting certain frequencies as well. It's all by preference. So if you like this frequency at 200 hertz, you'll add it. If you don't like this frequency at 500 hertz, you'll take it away. And you got to be mindful that everybody's vocal is going to be different. You know, what I do to my vocal, I wouldn't do the same thing to J. Cole's vocal or Young Thug's vocal or whatever. You know, it's all going to be different because everybody has different frequencies that sound good, that don't sound good, depending on what mic they recorded on and all that, right? So you do that, and then you have compression that comes after that. I like this compressor, the LA2A Teletronics. So compression is basically just leveling out the loud sounds, so to make it sound kind of even, but you don't want to kind of squash everything, right? You don't want to make it sound boring, but you kind of level everything out so you can turn it up louder. If you turn it up without compression, then it's going to sound wacky and all over the place, right? So you got to compress it a little bit and, you know, level it out so you could turn it up and make it sound punchy, make it sound aggressive, whatever vibe you want to go for. And you got a de-esser, more like EQ bass type thing, just taking out harsh frequencies, more compression, and then another de-esser, right? And then I got that on all the vocal channels, added some effects, reverb, delays, doublers, everything like that, all that good stuff. Same thing on this channel, right? Then here down, you got all the instruments. So of course you got the bass, 808s, the kicks, the drums, everything. You got all the instruments that the producer put inside this beat. So and basically, I just go over each individual instrument that I feel like it's important in the mix. Turn it up in volume, turn it down to make it fit. Gain stage here, right? We got some EQ, and then of course you got the melody. Try to make it fit. All music is getting the same EQ on this channel, same compression. Widen it out a little bit. Here you got the channel that everything is getting controlled, is going through, right? So this channel controls everything, volume for everything. If I EQ this channel, everything in the whole mix is getting EQ. Same thing with compression. Everything that goes into this channel affects the whole mix. And this is basically like the mastering stage, right? So I'm still currently working on it. Again, I'm gonna play you a little bit of it. If you can't hear it, then I'll just I don't know, I'll rap it for you. But I'm gonna just play a little bit of it just to see if you're feeling it or not. And again, it's not completely done, still in the works. Stay patient. It'll come to you. Yeah.
Told my family I'ma do it big. After all the shit that I done did. Told my family I'ma do it big. After all the shit that I done did. Told my family I'ma do it big. After all the shit that I done did. Told my family I'ma do it big.
We didn't get
After
too far.
all the shit that I done did.
I'm on a
different levels, should be in different eras. Since the time you gone, the only time they cherish. Almost said fuck it, cut the whole beat. This shit here deserve a acapella, but with the music playing, the bass knocking and the lights out, it make your soul shake. Got me wondering what's finna hit first. $1 million, nigga, on my soulmate.
All right, that's enough. Let me close that out. Let's get back to it. All right, so basically, that's what I'm working on, getting back into the mix, man. You know, trying to get into my groove. I know it's been a minute since I'm dropped some music, but you know, it's very, very difficult trying to mix and master the same song on your own. But that don't mean I can't do it. I'm working on it. Patience is key. So I'm trying my hardest to stay patient. I'm trying to get this work in on top of everything else. So I'm trying, right? So basically we got that out the way. Hopefully you like the music when I drop it. Of course, I'm gonna try to do some creative videos and everything as well. But that's what I've been working on. But let's talk about this market. Let's talk about what's going on in this market. First thing I want to say is obviously the market has been dropping, right? Did I predict the market would drop like this? No. But was I prepared for the market to drop like this? Yes. And I'll explain why. All right, we're gonna get to that. But first, I just want to talk about how to stay calm in times like this when your portfolio is dropping. First thing you want to do is assess what's going on, right? Is the market dropping because we're about to go into another recession? Does it look like a pandemic is on the horizon? Or is the market just dropping because it's cyclical? Does it usually happen around this time? Do sellers usually take profit around this time? What's going on? You don't want to get spooked by all the headlines that you see on these different news channels, these different media channels. When you're looking up articles, you don't want to get spooked by all these different headlines because they're all going to tell you different things. Consuming all that information is not going to be good for you, right? I'm not telling you not to do research, but make sure you have your own opinion formulated or your own thesis of why you may be thinking the market is going down. What's causing it? The market, does it usually perform like this around this time? You know, so you got to really assess what's going on, and that'll kind of calm things for you and really, you know, provide some type of comfort for you in times where your portfolio is going down. But the first thing I want to talk about is why I kind of was prepared for this market drop to happen like this, right? So let me pull this up real quick. Give me a second while I pull this up. Give me 1 second. Let me pull this thing up real quick. We're gonna pull this thing up right there. All right. All right. So this is basically, let me see. All right. So this is basically a chart of SPY, the SPY, right? So this is basically a reflection of the S&P 500. And again, each day is going to represent a candle, right? Each day is going to represent a candle. So here, every candle is going to represent one day. At the bottom, you got the volume, basically the amount of buying or selling that's going on within that day. So, and again, you can go back and watch my video on technical analysis to see the importance of volume. But every time there's a trend up or down, I always pay attention to volume to assess what's really going on. And that's important because if the trend is going up and volume is not high, that's a red flag. And that's exactly what happened from December, what date is this? December 20th all the way until basically January 3rd, when the market was on the rally, when the market was on making all those highs. Look how low volume is here. And what is that really telling us, right? So when the trend is going up, you want volume to go with the trend. You always want volume to increase if the trend is going up. Why? Because that's basically telling you that there are a lot of buyers in the market that's pushing their bids up to make the prices go up, and sentiment is strong on the bullish side. If the trend is going up, but volume is not increasing, then that basically is telling you that prices are going up just because there's a lack of selling. There's not a lot of buying going on in the market. There's just not selling going on. The sellers haven't really stepped into the market. So this was the red flag for me. I'm like, wait, all these days the rally is look at this rally, right? So here at the top, and of course you'll never be able to actually predict the top or a bottom. But this day, I sold a lot of my calls. I sold a lot of my 2023 position calls, a lot of my because I was up 100%, 200%. So I sold a lot of those calls, right? And again, one of the reasons why I did that is because volume was decreasing, which is basically telling me that this trend is not strong. This trend is not that strong. The sellers just haven't stepped into the market yet. So once the sellers actually step into the market, it's going to be a bloodbath. It's going to be red, 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 right? And what happened when we got to this high here? So once we hit this high on January 4th, I said, I was reading the VIX. It was at like 1615, which is usually a good support area for the VIX. And the VIX is the volatility index, basically just measures how much volatility is into the market. Usually goes up when a lot of people are purchasing puts or selling. That usually makes the VIX go up, right? So this day, the VIX was at 1615, which is kind of like a bottom area for the VIX in terms of recent past couple of years. So this day, the VIX hit 16. I said, all right, that's cool enough. We at a high right now in the market. Let me purchase some puts. And again, if you don't know options, it's okay. But basically, options are when you purchase calls, you're betting on that security to go up. When you purchase puts, you're betting on that security to go down. So in calls, if the security goes up, you're making money. In puts, if the security goes down, you're making money. So puts are usually on discount when the market is at highs because the sentiment is bullish, right? So I purchased a few puts here at this high, and puts are on discount at this time. And of course, I purchased puts that expire in April. I was expecting the market to do its little, pull back in February and March. And I was like, all right, I'll hold these puts just for insurance. All right. So I'm not like super, super bearish on the market. This is basically just insurance. If my portfolio goes down, I'm protected on this side by having puts. And these puts will help me make all that money back that I lost on my calls. So again, I didn't sell all of my calls. I still have a few in there. But I just, again, this was a red flag. So volume is very, very important when we're looking at technical analysis. Technical analysis will really tell you what's going on in the market to give you a gauge. And what happened here, of course, we're going to talk about it, but the Federal Reserve basically said they expect interest rates to raise a little bit sooner than expected, right? So they're going to raise them interest rates a little bit faster than everybody thought. And that was all the sellers need as a catalyst to step into the market and start selling. So these red candles, sellers started stepping in, and man, that market took a little tumble, right? I know y'all, if y'all was in it the past week, it's been dropping. So that's what I was looking at back here in December. When this rally started, I said, volume is kind of weak. Volume is not really showing that this trend is strong. So let me purchase some puts because I know this trend is not going to last for very much long. Now, did I think the market was going to drop like this fast? Heck no. Heck no. But in 2 days, 3 days, I got 50% return back on my investment on those puts. So I sold those puts, used that cash to purchase some more assets like Microsoft that's on heck of discount right now. If Microsoft continued to drop to that 306 level, best believe I'm adding more and more and more. But Microsoft is at a very, very good buy for me right now. I'm not going to even talk about, none of that stuff. And then the main thing I want to talk about as well is how to stay calm, right? If you know why the market is dropping, if your thesis on a lot of these stocks haven't changed, if the thesis on your portfolio hasn't changed, then I mean, it could just be cyclical, right? The market could be dropping just because it usually drops around this time. If it's not really affecting the stocks that you in terms of the outlook, then don't lose hope, don't lose confidence in those stocks. I would look at these as opportunities to buy. Because again, you always want to buy low and use these opportunities to buy good assets on discount. I love when the market drops like this. I've been waiting for the market to drop like this for a minute. I've been looking, at the market for a minute to see how is this going, what prices I'm trying to get in on a lot of these stocks. So I've been waiting, right? But I do want to talk about the Federal Reserve. So they released their meeting from December, and that hour meeting I watched, took some notes on it. And Federal Reserve has basically said that when Chairman Powell, about 3 to 6 months ago, he's been saying that inflation is transitory, that it's not going to be here to stay. It's just going to be something that comes and goes. But as of recently, his stance has started to spook a lot of investors because he's saying that, he might have been wrong about inflation. So now we're going to have to raise interest rates sooner than expected. They're going to end their tapering program a little bit faster than expected as well. And they're not going to raise interest rates until they finish their tapering program. So if they continue to go at this rate, the tapering program should be finished by March. So we could see the first interest rate hike anywhere from March to April, possibly. So why is that important into the market? Because interest rates, who makes money when interest rates go up, right? For the past couple of years, since March 2020, since the pandemic started, a lot of your financial banks haven't been able to make a lot of money on the interest rate or the borrowing side, right? When interest rates are low, banks are not really making money. That's where banks get their money from, through the interest rates on mortgage rates when you're buying a house, interest rates when you're doing auto loans. If those interest rates are near zero, then a lot of banks aren't bringing in a lot of cash. So if those interest rates start to rise, then banks will start to make some money because the borrowing costs are going to go up, right? So a lot of investors have been selling out of the tech sector, selling out of consumer discretionary sector, and getting into sectors like financials because they assume that if interest rates are going to go up, then banks are going to start to make more money, which is obviously a correct thesis in my opinion. So if you see that going on, then again, the tech sector it's been getting hammered, right? A lot of growth stocks have been getting hammered. A lot of the tech stocks, especially ARKK, have been getting hammered. A lot of those stocks in that portfolio. Again, if you truly believe in a stock, I wouldn't get spooked. I will look at these as opportunities. Crypto has been getting hammered. Why has crypto been getting hammered? Well, crypto is a very risky asset, right? If people are looking to invest their money, especially a lot of traditional investors, crypto, unless you're like a young millennial, if you got a lot of risk on the table, but crypto is not going to be the first place that an investor looks to put their money because it's more of a risk on asset. If you're looking at this environment and what's going on, interest rates, you're going to take out your money from a lot of assets, especially if you're reading these headlines and you're getting spooked, right? So a lot of investors have been taking out their money, sitting with cash on the sideline and saying, okay, where is the best place I should put my money in this high interest rate environment? Crypto is not one of them. Crypto is not one of them unless you're there risk on, right? Right now is not the time to be risk on in a lot of investors' eyes. So crypto has been selling off. A lot of tech stocks has been selling off. And again, I don't agree with the sell off. Like I haven't sold a lot of important stocks, right? I personally look at this as an opportunity to buy. Microsoft, if you don't think they can make money in a high interest rate environment, you smoking on some different crap, right? Microsoft is going to make their bread regardless. Apple is going to make their bread regardless. So I don't think this sell-off is going to last for a long time. And of course, in my opinion, like I said earlier, when I purchased those puts, I purchased them for the months of February and March because those are the months where the market usually tends to pull back. You see a lot of repositioning happening. You see a lot of investors taking out their money from the tech stocks and, positioning them for the sectors that they think are going to make them money this year. And again, I didn't expect the market to drop like that this fast, but we could possibly be seeing that February, March correction happening right now, depending on what happens this week, right? I don't know what's going to happen this week in terms of the market, if buyers are going to step in, if they like the prices of what's going on right now, but, we'll see. All you can do is just take what the market gives you, right? So a lot of investors are looking at stocks or assets in which can make money in high interest rate environments. So you just got to do your research to see what companies don't have a lot of debt on their balance sheet, what companies have a lot of cash or assets or securities on their balance sheets, what companies are going to make money in these interest rate environments. Are these companies paying more for inputs on a lot of their products or services, right? And if they are they passing those costs down to the consumers? Are they still going to be able to raise their profit margins in these environments? And that's why a lot of investors are kind of selling out of these tech stocks because they don't believe they can. They don't believe a lot of these companies are able to make profits in these high interest rate environments. They think their profit margins are getting cut into. They need to have a lot of debt on their balance sheet. And again, you can go look at all of this data. And if this will help you stay calm, because this will help you see the truth. This will help you analyze of what's really going on in the market. So that's one way that I usually stay calm. I don't really get bothered by the headlines. I'm looking at the data of what's up this week, right? Let me share my screen real quick to show you another thing that I'm talking about. So you can go to the economic calendar and see what's really going on, and what's really happening this week. So this is the key economic data that we have coming out this week. Wholesale inventories to kind of see, are those supply chains easing? Are a lot of companies having a lot of inventory on account to see if those supply chains are starting to ease, or, you know, if demand is still higher than supply at the time, right? And you got the CPI, core CPI coming out, which basically measures inflation. But that's not what the Fed uses. The Fed uses what we call the PCE index, the personal consumption expenditures index, right? And let me go back here, right? So the last release that they had came from December 23rd. So the next release is January 28th, right? And that is what the Fed uses to measure inflation. And it takes into account like personal income, disposable personal income, how much consumers spent on goods and services over the month. And that's what the Fed uses to gauge inflation. They're not using the CPI. They're looking at it. It's important, but this is what they use as their gauge to measure how inflation is going. And the next release for this is January 28th. So based off of that, I'm basically saying, like, what can we expect in these next few weeks, these next few months? You got to look at the data that's coming out. So if the Fed is paying attention to the PCE, then January 28th is going to be an important day, because that's how the Fed is going to measure what's been going on in the economy, right? Tech stocks. Tech stocks has always made their money off of earnings. So when earnings seasons comes, a lot of these tech stocks are going to have to prove themselves again, right? Data does not lie. So a lot of these stocks are going to have to prove whether they can make money in high interest rate environments. They're going to give their outlook. A lot of companies don't have to, but guidance is going to be very important. Guidance is going to tell us whether you're going to be able to make money this upcoming season, right? We're in a different economy this year. We're going with high interest rate hikes. You know, mortgage rates are going to rise. How does that affect home prices? All these different sectors are going to be affected. So earnings season is going to be huge. Obviously, the sentiment changed right now, right? A lot of investors have cash on the sideline. They're in financial sectors, energy sectors, material sectors. Let's be real. A lot of investors want to be in tech. A lot of investors want to be in your tech stocks because that's exciting. But they're going to need earnings to prove whether they should be in tech stocks. Whether is that going to be a right decision to be in those stocks? So earnings season is going to be huge. Outlook guidance is going to be huge. Economic data coming up this week. A lot of stuff that we're going to read is going to be huge. January 28th, that PCE reading is going to be huge. So this is all things that investors are looking into to gauge what the economy is looking like, what the stock market is looking like. And there's a lot of other things I haven't even touched on, and we're going to get to it eventually. But again, stay calm, read the data. If you believe in your portfolio, when stuff is on 10, 20, 30%, man, a lot of these stocks, tech stocks like Zoom and stuff, 75% discount, 50% discount. If you believe in those stocks, and again, I'm not a financial advisor, I'm not telling you what to do. I'm just saying, if you believe in a stock and the stock has dropped 50% from its high, that's on discount. That's on discount. Think about it like if you were buying a necessity. If you usually go to the store and you see bread that's $5, that same bread, nothing changed. It still tastes the same. Everything is still made the same, but it went from $5 to $2.50. Stock up on the bread if you really, really still eat that. If you really like that bread, if that's the necessity for you, if you need that bread to make your sandwiches for lunch, then go buy that bread. If it's on discount, then please don't hesitate. But again, I'm not a financial advisor. I'm not telling you what to do. That's what I'm looking out for this week, these next few months. I'm looking for some discounts in the market. Again, me personally, I like where Microsoft is at. So I stocked up on a lot of Microsoft this past week. If it continues to drop to that 306 level, options will be loaded up on that call side. Best believe I won't hesitate. Money is getting deployed right into Microsoft. But that's my summary for the week. I hope you enjoyed it. I hope you learned some new things. If you haven't checked out my video on technical analysis, I would suggest you go look at that to understand why volume is important in reading what's going on in the trend. Please subscribe to the channel, like this video, share it with a friend, and we'll be back next week. Holla at me.